Hi guys, thanks for tuning in to another episode of Nuggets News. Today, welcome back an old friend for his second or third appearance, I think, Adrian from Crypto Tax Australia. It's coming up to that time of year. There's been a few changes. There's a lot going on with JobKeeper JobSeeker, a few other things to talk about. A lot of you are into mining or DeFi these days. So yeah, there's a few new little aspects we're going to touch on. But welcome back, Adrian.
Thanks, Alex. Thanks for having me on again.
No worries. And for those that don't know, Crypto Tax Australia are a partner of ours. I've got their website up there. I'll put in the description below. I think hundreds of you have already got your tax done with Adrian and the team, and you guys do get a discount, and members get a bigger discount as well. But Adrian, maybe let's just quickly go over the basics because there hasn't been any, I guess, legislation change from the ATO, and we'll link to their
Yeah.
website and everything as usual as well below, guys. But yeah, what's your quick overview of the past 12 months, Adrian?
Well, I think specifically when we talk about that big run that we had in 2017, there was probably a lot of people that came into the space that had never invested before, and it probably was a steep learning curve from, I guess, an investing point of view and a tax point of view. And a lot of people probably weren't clear on how the rules worked. I know the ATO, you know, I guess willingly put out some guidance. I think it was on the 29th of June 2018, which was great for investors, a day before the end of the financial year. But I think now that people have been in the space a little bit longer, they understand how it all works. But I just want to clarify some of the basics again, because some people are still getting some of the basics wrong, and even getting wrong advice from accountants. And I know there is a lot of new investors coming into the space. I've been talking to people that have just got into crypto over the last 3-4 months. So, unfortunately, people are always going to disagree with me on this one, but transferring crypto to crypto is a taxable event. We know that now. There's a lot of guidance on the ATO's website. Yes, I know if you have transferred back to Australian dollars, it's not real money, all this sort of thing. But, the guidance is pretty clear now. I don't think the ATO is ever going to change that, unfortunately. So you just obviously need to be aware of that. And one big thing is that a lot of investors have been trading in and out of Tether, a USD type stable coin. That is still considered an asset from a tax perspective. So you just need to be aware of that, because we have had a bit of a change between the USD and AUD rate over the last 2 years, really. And just the personal use asset as well. You just be aware that it's going to be very rare that case is ever going to come up unless you've got a specific type of card, with I think I touched on last time. I know the crypto.com is getting very popular now, with their card and the way that you can earn and loan out as well. And it really just comes back again. I've got to always harp on about it, the record keeping about it all.
Yeah.
Make a I guess note it down to yourself. To do it once a week or once a month. What loans are you taking out? A lot of people are getting into the DeFi space at the moment, especially over the last year. We had a huge run in SNX. There's been some great client stories on that one. I know some clients that got in really early on that, which was really great to see. It's always good to hear those success stories. But yeah, just keeping the records of what you're loaning out. Are you taking out money? When do you pay it back? What are your costs involved in that? But the ATO's got a lot of guidance now on their website about the basics. So just take half an hour and read through that. And if you've got any questions, we're always happy to answer them.
Yeah, I think the stories you hear when people trip up a bit is where they've got their long-term investing coins or the things they've been trading with, and then they transfer it to a card or go to spend that on something else, and you can't sort of claim that that's personal use crypto that you bought to buy things online if you've been hodling it for years or been trading with it. So you've got to basically separate everything and document that record keeping, like we were saying. And DeFi and lending interest, staking, all these things where you're earning yield. That's becoming really popular now. So it's actually very easy if you can keep that record or just print it out and give it to your accountant at the end of the year. It's not that complicated.
Yeah. Look, it does, but over the last year, I've also seen a bit of a change. There's been a bit of maturity in the space. I think there's only been really a handful of clients that have said, look, I'm done with crypto. I don't want to talk about it anymore, that sort of thing. I think the majority of people have, even though a lot of people probably learned a big lesson when we had that big run and, everyone was in that euphoria stage. But a lot of people looking at from a long-term perspective now, setting up different structures for their long-term portfolio, which is really good to see. And there's a lot of people that are using less exchanges as well. I think sometimes less is more. You don't need 10, 20 exchanges anymore because, a coin's being listed on a certain exchange. I know a particular client had 40 exchanges. It's not necessary if you're just really, you only need probably 3, max 4, depending on what you really want to be doing.
Yeah, people have probably whittled down their exchanges and their focus. I think you were saying before that a lot of people now are just concentrating on, dollar cost averaging Bitcoin or a few coins, and it's probably the easier thing to do for a beginner, but also a lot of experienced users have gone that path for like tax purposes, just for trading purposes. They believe in Bitcoin more than the other coins that they FOMO'd into in that 2017 run. So I guess that's simplified things for some people.
Dollar cost averaging has been a big turning point for a lot of clients. It sort of comes back to what you sort of talk about a lot, Alex, and that is like asset allocation. I've seen a lot of clients, dwindle down on the coins that they actually hold, and probably have their asset allocation a lot better than they had before. We're seeing clients that were making money and going all in on an ICO, and I think they've learned from that experience. And it obviously is a lot easier for record keeping and just seeing the long-term growth instead of just sort of, taking a punt on one. You might as well just go down to the casino and betting on one number.
Yeah. And the other thing you mentioned there was setups in like company names or particularly trusts. I know, for us, when Louis was born, for example, you can set up these trusts, put a Bitcoin in there and have it for your kids for the next 18 years or whatever.
Yep. It's becoming popular now. Like I said, there's people looking at it for a long-term perspective. They might just be buying a little bit every week or, once a month or on the dip or whatever it might be. Again, if you don't sell, there's nothing to sort of declare in that instance. So the tax implications are minimal. But yeah, it's good to see that people are sort of maturing in that space, over the last couple of years.
Cool. The other things that we wanted to get to, I guess, were the JobKeeper. So everything that's going on at the moment has really thrown a spanner in the works for some people. So we've seen the JobKeeper come through, the JobSeeker. They're talking about changing that now. Some people got the government stimulus. Funnily enough, we saw a lot of people in America spend that all on crypto. But what have you seen, how that has sort of affected the average crypto investor?
Look, we've been busy the last couple of months just because of that. It's sort of come out during the lodgement time. I think the majority of accountants have been really busy the last couple of months just to get clarification on what that all means for their clients. Because there was times where the government would announce it, and the day after you get all these phone calls from clients saying, look, can I get to $750 a week and all this sort of stuff? And I said, look, the specifics haven't come out yet. We need to wait for that. But unfortunately, I have had a number of clients, be let go or they've got reduced hours. The ATO and the business websites got a lot of information about that, especially for the job seeker. Those that have obviously lost their job. I know there's access to your superannuation if you need to, if you're in hardship as well. But specifically, it has hurt businesses. Obviously, in different industries, it's hit it a lot harder. And there's that trickle down effect where, they've got reduced sales coming in. That means they can't pay their employees as much. Some employees are, getting paid $1,000, $1,500 a week. The government, yes, I understand, is providing $750 to those businesses that are eligible and to each employee. But that obviously doesn't cover what the employee is normally used to taking home. And it also ripples down to commercial landlords. So the commercial landlords have still got to pay their bills. They've still got to pay their council rates, their land tax, and all their other costs. And if they're getting a 25% or a 50% reduction on the rent that they're being received, then that obviously affects their ability to pay things and their family situation. And, the government obviously has stepped in and tried to assist there. But there's been specific... I know I spoke to one client specifically who was in events management, and they were, shooting rockets, and they were scaling up their employees. They had about 20 or so events booked, and they had to obviously just cancel it. When this whole situation came about.
Yeah. Just so you know, Adrian, that chair's squeaking a little bit when you're moving around. Is that near the mic or anyway?
No,
just so you know. The other thing that you touched on there was the super. So have you had people that are tapping into their super? They're getting that 10K. They're planning on getting that other 10K. We've heard stories that a lot of people are using that for like gambling, or have you seen it for crypto, or people who are in need using that? Or I guess it's not directly related to crypto, but I guess what are you seeing there?
Look, where people have lost their job or have got on reduced hours, I think the majority of people are looking to do that. Obviously, depending on the life cycle where they're at. I know a lot of people are taking the 10K and slapping it straight on the mortgage to reduce their repayments. I know that's a bit of a strategy that they're doing. Yeah. I haven't heard any stories particularly of people gambling it away. Look, I'm sure there probably is. But that's what I'm saying. I'm seeing people just putting it on the mortgage. They might invest a little bit now that obviously the share market's come down a bit. But recently, obviously, that hasn't fallen true. But it's also making up the lost income that they've got as well. People still need to survive. They still need to pay their rent and their food bills as well. So that's what I've sort of seen.
Yeah. No, it's there's a lot more rules around super as well, and there's a lot of guidance on the government websites. But it was interesting for me because I haven't necessarily seen or heard that, but there's a lot of stories coming out from the mainstream media about those people and the amount of people spending it on gambling in Australia as well as America. So that did surprise me a little bit because I didn't see that happening. We obviously see people talking about maybe buying crypto and whatnot, but interesting. The next thing to talk about was the letters. So this is the first year where people have got a letter. I've always spoken about on the channel that, well, firstly to do the right thing, but B, because it's on the blockchain forever, and we know the exchanges are being audited, and now it's basically, it's very public that they've had hundreds of thousands of the accounts and the records that the ATO and whoever else can tap into. So it's all kind of there, guys, and that's why you have to do this record keeping and do the right thing. But a lot of people have got those letters now.
Yeah, so I went to a conference, I think it was in November, and there was two ATO officers there that I spoke to face-to-face about it all. And they said to me, look, we do get the data from the Australian exchanges, names, obviously addresses and all that sort of thing, and they have matched them to their database, to tax file numbers. So I know they do receive things like trades, withdrawals, deposits, that type of thing. In March, we did see letters start to come out. I believe that they were doing it in batches because I don't think everyone got a letter. I believe they probably do it sort of a month-by-month basis. I think specifically the lady I was speaking to said we've got over 500,000 records at the moment. But I think when this COVID thing sort of came about, that was, I guess, put on hold for a little while. I'm sure they'll start sending those letters out, in due course. But we have seen an uptick in people coming forward and wanting to do an amendment, I guess, because it's obviously in your benefit. If you've made losses during the year, specifically for 2018 or 19, you want to be able to claim those losses so you can use them moving forward. And, capital losses don't expire. So if, let's say that you put your hands up, you don't want to invest in crypto anymore, those capital losses can be used against shares or a rental property or other types of assets. So they don't expire, basically until you pass away. So it's always, I believe it's always a good thing to capitalize on that.
Yeah, a lot of people think, I lost a heap of money on that trade or that investment, and just sort of stuff it. And really, if they've got their other coins and they're hoping Bitcoin and whatever goes up in the future, then guys lock in that loss on paper to offset your future gains on your other projects, and it's going to work in your favor. Anything else just quickly about stories we've heard? We've already touched on, I guess, staking and dollar cost averaging, DeFi. We've got a lot of people doing mining. We do our monthly report. And you mentioned a case where there was a flash crash on an exchange or something?
Yeah, so there was a success story I heard, I think it might have even been last year, where they were trading on a leveraged exchange. I think it was on FTX. And when we had a flash crash, I think it was November, it might have been last year. Essentially what happened was they were trading tokens, and they bought these tokens for a very small amount. I think it was a bull token or a moon.
A leverage token, yeah.
A leverage token. And sort of flash crashed to 11 cents and then bumped up to $4, within a couple of hours. The client made, over $300,000, within a couple of hours, which is always good to hear success stories. I am hearing a lot more success stories lately. It's not just the doom and gloom of 2018 where people put in more money that they could afford and then lost. People are making better decisions through obviously experience and knowledge, which is really always good to see. And sort of reiterating what I talk about every financial year is looking at your portfolio and reshuffling. If you've had some good trades this year, you want to make sure that the badge, I guess, investments are offset against those gains before the financial year. It's always heartbreaking to see clients paying tax on gains that they've made, but on their portfolio of the coins that they've invested in are in a loss position. So you want to try and offset that. And I've talked about that in previous videos if people want to have a look at that.
Yeah, in the previous videos, guys, we did a really detailed, I guess, rundown of all the different types of traders and investors. I might link that as well. That case that you said is interesting. These people often reach out to me, or they're members in our group, and that person reached out to me, and they were pretty blown away when they made 300 grand in one morning. But that's why it's good to also set up these trusts, because you don't necessarily want to pay tax on 300 grand as a trader, particularly for a short trade. So you can start to set these things up and then tap into that profit as you need. So there's what is an advantage is you can deploy, I guess, that people might not be aware of. Software, that's definitely got better. A few years ago, there was basically no software. There's still not really good software for business. I know it takes us a lot of time and effort with accountants and lawyers and employing people to balance everything. But the software is getting a little bit better. People are more aware of how to do that.
Yeah, look, there is a lot of software out there. Obviously, you need to be aware of majority of the software is built for US. So you do need to tailor it. Sometimes, I know there are some Australian companies that have just got an Australian tax focus, which is really good. You just need to be aware that you need to put some time and effort into it to understand how it all works. making sure that it is right. Just double check that what it's actually giving you is the correct value, because obviously the software companies don't guarantee. If you do go to an accountant, they will, I guess, guarantee that their work is done accurately and effectively, and making sure that they're looking at it at an overall view, as well as providing the tax advice as well. So that's another reason to obviously speak to an accountant that does specialize in crypto. Yeah. We do have clients that come across from other accountants that don't have any specialization in crypto. It's obviously, you don't want to be telling them, explaining to them what a wallet's like, or how an exchange works. So we're seeing a lot of that lately.
I think there was in 2018, 2017, there was an army of lawyers, accountants. They got paid to learn by all their clients, basically, to get up to speed on how everything works. But that's why we partner with you guys and other businesses that are familiar with all the crypto stuff. So I guess that's probably most of the things we want to cover. For people at home, this is the first year they've been in crypto, it is really important to make sure you fit into the right category, because it's not just one size fits all. We've got traders, investors, businesses, other things like that. So that's why it's best to look at the guidance on the ATO website and the other websites. Get in touch with a professional if you want to do it that way and leave it to someone else. Any other final thoughts, Adrian?
I know I touched on this last year, but estate planning, again, a big issue that I'm seeing. As you're developing wealth along the way, especially in the crypto space, you obviously want to keep that safe. I know I have been talking to clients about best security practices. A lot of, sometimes there might be suggestions where you might have vaults. I know in Melbourne there's a few that are very inexpensive. You can buy a little safe vault for $150 a year. If you really want to have your private keys in 2 separate areas or 3 separate areas, sort of like a multi-sig, if you want to think about it.
I was going to say, just quickly, for people at home, that is something that Ainsley offer, who we do the gold and silver stuff with. I'm pretty sure they do that as well for crypto wallets. And these days you've got independent reserve, I think, getting into the insurance and custody side of things. So it is changing that landscape of how to store your crypto and how to leave it in a will and that kind of thing.
Yeah. I mean, look, I jokingly said to a client that the other day, we might see, obviously back in the day, some of our grandparents might have hid some gold, underneath the house, or they might have hid it up on the roof. One day we might, someone might buy a house and renovate it and go up on the roof and find, a list of private keys of Bitcoin that they might have had at some stage, and, plug that in, and, they found basically gold. I'm sure we're going to have some of those stories at some stage.
Yeah, it's a bit different finding a hardware wallet, a ledger, than finding a chunk of gold. Get in there and see if it's password 123 and see if you can get in there. But, that's great, guys. If you've got any questions, drop them in the comments below. Again, you guys all get a discount for members. Check the members area. You guys get a bigger discount as well. We might get Adrian to answer your members' tax questions in a thread when we post this video as well. But thanks for joining us, Adrian, and thanks for looking after all our followers as well.
No worries. Thanks a lot, Alex.
Cheers, guys.
Thanks a lot.